morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. It's Wednesday morning. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. PwC resigns as the statutory auditor for Reliance Capital and Reliance Home Finance, flagging concerns over some transactions. Dewan Housing Finance pays out 962 crores in overdue interest payments on its non-convertible debentures. The company had sought a 7-day cure period for the same. Reliance Industries and BP sanctioned development of third phase of KG-D6 by 2022. This is the deepest natural gas discovery in the flagging block. Moody's Investor Services placed Yes Bank's credit rating under review for a downgrade owing to its exposure to NBFCs and real estate companies. Well, you know the set of companies that it is exposed to as well in a big way, so no surprise that this has happened too. However, it is in news for a lot of other reasons as well. Let's take a look at the trade setup for the day though, because there's lots more that is happening beyond one or two companies. Firstly, around the world, it was, the S&P 500, the Nasdaq halted a 5-day winning streak. So if you look at what the markets have done, ended very flat in trade yesterday, but the 5-day rally has taken a pause. Up for the last 5 days in yesterday's session, erased almost 185 points. That's the beauty of that chart. It shows you how the market started off very well, but the Dow erased 185 points from the highs of the day to end marginally lower in trade. Nothing, no big repercussions or anything because it was a flattish close, but the markets did come off. It's showing in the way the Asian market or the Asian screen has started off as well in the session today with almost all the major indices. It's a mixed start, if you will, to the Asian screen with Hang Seng down about 0.25%, 1.25%. Nikkei flattish to marginally higher in trade, so hardly any movement there or mixed movement at best for the rest of the Asian screen as well. Our markets are likely to start off on a slightly flattish note, I would reckon. Just keep in mind that the SGX Nifty indicates a start which is very, very flat in trade. I think big news, a lot of developments happen and we'll talk about some of these on First Word as well. But I just thought I'll bring up this one particular thing that was the talk of town yesterday and the government's response has come in as well, wherein the question marks raised by former CA Arvind Subramaniam, who says that the growth in India overestimated between 2011 and 2017. And the government has stated that the GDP data is backed by statistically rigorous method approved by both the World Bank as well as the IMF. The only key is Arvind Subramaniam, the former CA advisor, says that the data has been misrepresented from 2011 and 2017, not necessarily 2014 and 2017. So keep that at the back of your mind as well. Will it have a big impact on the trade? I doubt really. The start is, as we said, marginally flattish and the positions still remain very, very wide. So yesterday I was talking about this. The largest the max OI, that figures are incorrect. Essentially 12,500 and 11,500, yes, are the max OIs, but the maximum addition happened at the 11,700 put. So that's not the maximum OI, it is the maximum addition in which in trade yesterday. So while 11,500 remains that level which is sacrosanct as of now, 11,700 has started to see a fair degree of addition as well. But does that do anything dramatic to the index? I doubt really. I doubt that looking at these positions, anybody can take a call as to what the index is going to do on any given day, particularly today, which is, well, devoid of large index-specific news, both on the global and the local front. So it'll probably be stock-specific. Will stocks react? Well, a lot of them could. Firstly, Reliance Capital, as our headline stated, PwC's resigned as statutory auditor. They say, amongst other things, that they did not receive satisfactory response to the queries raised by them. We'll talk more about this, of course, right up on First Word, so I won't dwell too much on it. But Reliance Capital would firmly remain a stock in focus today. It's, I believe, still in the F&O ban, so don't quite know what kind of fresh positions can be taken, but could start off lower. Yes Bank and the board churn continues. Mukesh Sabharwal is now resigned as the non-executive director of the bank. Remember, this is the second resignation in 2 days. I believe Mr. Rai resigned in trade from the Yes Bank board yesterday as well. So 2 resignations in this week, 5 in the current year as well. Maybe doesn't augur well for Yes Bank. Let's see if the stock reacts or no. One stock that could react is Dewan Housing. They've stated, the statement from Dewan Housing says that they have cleared all overdue payments on NCDs which were due on June 6th and as a result of these payments being done, they are going to seek upgrades from rating agencies. These has repercussions not just for Diwan Housing as a stock, for schemes holding DHFL paper as well. So as much as DHFL's uptick in today's session from a long or a short perspective is important, depending on whether you're long or short, you may like it or you may not like it. But if indeed what they are seeking, which is a rating upgrade, does come about, they might bring about some bit of restoration to the NAVs of a lot of those schemes as well, mutual fund schemes too. So very important to monitor what happens here. Lastly, I thought the note on SRF was particularly interesting. There are 2 or 3 brokerage notes that have come out, but I'm sure we'll talk in detail about Citi's note on SRF. They've maintained the buy rating with a price target, which has been upped to 3370. They believe, or rather the management to Citigroup has said that the specialty chemicals business will grow 40 to 50% in FY20. On that base that SRF has in specialty chemicals, that's fairly strong growth numbers that the company is talking about in its interaction with Citi. So let's wait and watch if SRF were to react, not necessarily to this statement, but to the target price that Citi's laid out, would be important and interesting to monitor. Okay, let's tell you what's lined up on first for today. As I said, we'll start off with PwC. Somit Sarkar will join us why the auditor resigned from Reliance Capital and Reliance Home Finance. So that's one big important thing. And then Reliance Power's auditors too have raised some red flags. Aman Kapadia will talk about those points of concern. So we start off first with ADAG. And then it's been 2 years since RBI sent 12 large stressed accounts to the NCLT. Vishwanath Nair takes a look at the progress made. And India's graphite makers will be facing a threat from China. Nikki Mirchandani will tell us all about it. And we wrap up first word with INOX Leisure, which may be starting to play catch up with PVR. Mishika Parak will join us with a comparison. Start off with the big news. Pricewaterhouse has resigned as auditors of Reliance Capital and Reliance Home Finance. The audit firm has cited a number of reasons for stepping aside. Somit Sarkar is here to take us through those reasons and those details. Somit, good morning.
Good morning, Raj. So what has happened? So PwC, who is one of the statutory auditor of the company, has resigned from the company. Now there are 3 reasons that PwC has stated. Firstly, it is saying that they have noted some observations and transactions in their assessment, which if not resolved satisfactorily might have a significant or a material impact on the financial statements of Reliance Capital and Reliance Home Finance. Now Reliance Home Finance is a subsidiary of Reliance Capital, so it will be totally impacting Reliance Capital. That's what PwC said. Second, it also said that that the company did not convene an audit committee meeting within the expected time period. So that is the second reason why PwC had resigned. And thirdly, the company also said to the firm that it might initiate appropriate legal proceedings against the company. So these are the main 3 reasons why PwC has resigned. Now on the first one, which is the most serious one, where it is saying that there are certain observations and transactions which could materially impact the financial statement, is saying that it has not received satisfactory responses from the company for these queries, and that's the main reason why it has resigned. Now the exact statement that PwC has said is according that these actions of the company have prevented it from performing its duties as a statutory auditor and as exercising its independent judgment in making the report to the members of the company, and as it has been impaired of this independence, it believes that it is no longer in a position to complete the audit and instead feels compelled to withdraw from this audit engagement, and that's the reason it has resigned. Now what the company says to this is that the company has not agreed to the reasons given by PwC in its resignation, and it says that it has duly responded to all the various queries that have been raised by the company, and it has also validly convened the audit committee meeting. So this is what Reliance Capital and Reliance Home Finance has to say to PwC auditor, and the other statutory auditor, that is Pathak HD, will now remain as a sole auditor for the company and will certainly look at all the observations that PwC has put out for, and the company might also take a legal proceedings, might also conduct some legal proceedings based on the opinions of the expert and to protect the stakeholders of the investor. That is what the company has said. So given the fact that Reliance Capital is still not come out with its result and is expected to come out on June 28th, this resignation is obviously a negative point for the company. Now if you see, PwC does not audit any is not a statutory auditor for any other Reliance group companies, but is also auditing some of the subsidiaries of Reliance Infra and Reliance Power. So we'll have to watch out for whether they also resign from these companies or not. So far that nothing has been, the letter of resignation of the auditor has not been put out on the MCA, so we'll be watching out for that also and see whether there are any other reasons that the auditor has mentioned in its letter of resignation.
Day of reckoning, day after tomorrow, then Somit, I presume, because Reliance Infra, after 2 deferrals, slated to come out with results.
Well, yes, the results are expected to come out on June 14th, and this resignation is actually a negative for that company also, because there are some subsidiaries of Reliance Infra that PwC audits, and if they have resigned from that also, then those companies also, then the result can take further time to come out because of this resignation coming.
And that will not be viewed positively by the markets at all. Well, let's wait and watch. Thanks for that, Somit. But remember, that's not the only ADG firm, Reliance Capital, that is facing heat from the auditors. Reliance Power auditors too have voiced reservations on the company and some of its subsidiaries running as going concerns. Aman Kaparia, who's gone through the auditor's note, gets us these details.
The auditor of Reliance Power has raised doubt on the company's ability to stay afloat. This doubt stems from the company's high loss and liquidity crisis at the company. For the March quarter, Reliance Power posted its biggest quarterly loss of Rs 3,560 crore. The high loss was on account of impairments which largely stemmed from lack of cash for its Samalkot Power and unviable solar unit Rajasthan Sun Technique. In terms of liquidity, the company's current liabilities exceeded its current assets by Rs 12,249 crore at the end of March. What that means is that even on sale of all of its current assets, it would fall short by more than Rs 12,200 crore to service its short-term debt. In its report, the auditor also raised doubt on the going concern ability of 2 of its subsidiary companies. The first subsidiary, Rajasthan Sun Technique Energy, was facing liquidity crunch, loss, and continuous default, which led the auditor to raise doubts on going concern. In case of second subsidiary, Samalkot Power, it was because of its dependence on subsidiary to execute power project in Bangladesh, and it's in hunt of vendor to sell its asset worth Rs 1,600 crore, which will lead to future cash flow. Moreover, US Exim Bank, one of its lender, had recalled its outstanding loan facility, and in FY19, the company wrote off power property, plant and equipment worth Rs 276 crore. The auditor's report also had 2 qualifications on the company's financial statements. The first being in regards to depreciation. Reliance Power used a different method to compute depreciation than the one used by its subsidiaries, which is not as per the standard. So the auditor mentioned that if the depreciation method used by Reliance Power was the same as its subsidiaries, its loss for the year would have been Rs 501.91 crore higher. Reliance Power disagreed with the auditor's opinion and said it had reached an opinion from a reputed legal and accounting firm that validated their practice. The second qualification pertained to an intercorporate deposit that Reliance Power received from related parties. The qualification said that the company did not take audit committee approval. Reliance Power, in reply to the qualification, mentioned that it does not have any influence on the director or operations of the company who lent the money. In response to doubts raised by the auditor, Reliance Power in its financial statement said that it expects to generate sufficient cash on time selling gas-based power plant equipment, realization from regulatory arbitration claims, and sale of other assets from certain subsidiaries. And it is also confident of restructuring loans.
Well, that's ADAG and certainly under a spot of bother. Keep in mind, though, a couple of these firms are under a F&O ban, so no new fresh positions may be taken today. And therefore, the reactions, if at all they were to come, may not be that large as they would be otherwise. Keep that at the back of your mind. It's been exactly 2 years since the RBI sent 12 large non-performing assets to the NCLT using the Insolvency and the Bankruptcy Code. The code was seen as a panacea for massive debt pile owed to the banking system and a way to teach errant promoters a lesson. Did it serve its purpose? Vishwanath Nair has the answer.
It's been 2 years now since the Reserve Bank of India had put out that first list of 12 large corporate accounts which was supposed to be sent to immediate insolvency proceedings. These are those 12 cases, but let's try and understand what has happened since then. In these 2 years, there has been very little headway that has been made in these cases. In fact, we'll break it up into a few categories just so that it's easier to understand. The first of which is a list of cases which have actually gotten resolved under the insolvency proceedings, and that's just 3 of the 12 cases. Bhushan Steel, which was bought over by Tata Steel, Electro Steel Steels, which was bought over by Vedanta, as well as Monnet Ispat and Energy, where JSW, Aeon were the approved bidders for the case. Now, these are the three cases where resolution happened. Bankers have recorded their recovery, and therefore these cases are now closed, and the companies are now functioning and trying to become standard assets. The next category is the more important category, and that's cases which have actually gone into liquidation. This is situations where the NCLT has ordered a liquidation case, and finally the case is now getting sold. The official liquidator is selling these assets, and thereby bankers are recovering some amount of money. That's ABG Shipyard and Lanco Infratech. Both these cases were situations where no bidders actually turned up, or even though some of the bidders who might have shown initial interest, that interest did not really pan out into a viable deal, and therefore the lenders had to send them for liquidation. The next category is basically cases which are still pretty much in limbo, and that's in cases like Alok Industries as well as Bhushan Power and Steel. In both these cases, the NCLT is yet to approve the final bids that have been submitted. So the creditors in both these cases have approved the final bids. Reliance and JM Financial had bid for Alok Industries, which the creditors approved. Similarly, in Bhushan Power's case, JSW's bid was also accepted by the creditors, but the NCLT, at the NCLT level, that final approval is still pending, and therefore these cases are pretty much in limbo. The next set of cases are cases where the NCLAT is causing that judicial delay, and that's one of the more most talked about cases, that is SR Steel, where the promoters tried to litigate multiple times. So since then, the creditors as well as the NCLT, the Ahmedabad bench of the NCLT, have actually approved ArcelorMittal to go ahead and take over SR Steel. But at the NCLAT level, there is still some cases pending, and therefore this case has not yet gotten resolved. In Jyoti Structures Limited, things were slightly different. What happened was there was a set of bidders which the creditors approved. The NCLT did not find those bidders to be fit, and therefore the NCLT ordered for liquidation. But the case then went to NCLAT, where the NCLAT said that the liquidation order needs to be set aside and resolution needs to be figured out in that case, and so that is still pending at the NCLAT level. The next set of cases is basically cases where things are looking pretty slim, and the chances of recovery are quite minimal. That's ERA Infra. Now remember that ERA Infra was actually admitted in the insolvency after about a 12-month delay since it was first referred to the NCLT for insolvency proceedings. There were multiple cases pending at various courts across India, and therefore the insolvency took a little bit more time. JP Infratech, that is one of those cases where there has been multiple exemptions that have been given by various courts. First, the Supreme Court of India restarted the entire insolvency proceedings in August 2018, and then after that the NCLT then gave the creditors some more days, because they said, let's remove the litigation period and give you more days. But there again, the creditors have actually rejected NBCC's bid, and so now questions are arising whether they get a chance to call for new bids or whether the case goes into liquidation. And lastly, it's Amtech Auto, where the Liberty House UK was selected as a final bidder. The case seemed almost closed, but then later on Liberty House sort of pulled back from the resolution process. For that, the company was of course penalized by the IBBI, but Amtech Auto, the NCLT has said that the restructuring process needs to start from scratch, and therefore that recovery will happen sometime later, probably next year. So this is where all of these 12 cases stand at this point in time. Just 3 cases where actual recovery has happened for the lenders. In all the other cases, lenders are still waiting for money to come in. Most of the bankers expect that in the coming months that money should come into their bank accounts, and thereby the provisions can be written back. But of course, we still need to wait and see how these court processes actually finish.
Well, time will tell. Let's see how well it turns out. But moving on to some specific sectors, start off with steel and then go on to exhibitors. It's not just steel and tire makers which have to keep a watch on what their Chinese counterparts are doing. Graphite electrode manufacturers like HEG and Graphite India are bracing up for a sharp decline in prices as well, now that China has started producing more. Why should you be concerned? What should you be concerned? Nick Binchandani has the answers. Nikki, good morning.
Good morning, Neeraj. Graphite electrode makers typically have not been doing well since the start of the year. As you know, 40-50% downtick in both HEG and Graphite India stocks. We've seen the margins correcting essentially of these companies normalizing from that 70% kind of level to 50%. What's latest to the development is the Changsheng, one of the China's leading graphite electrode manufacturer, going ahead and resuming production after a span of nearly 7 years after the closure happened. The rationale behind this move is it sees a better environment or more demand coming in for graphite electrodes. It's now, remember, it's a cyclical business. There are a period of upturns and down cycle for the commodity as a whole. But then with this, it stokes the fears that now the demand will be, the supply will be more than that of demand, which in turn will lead to some correction in the prices. Citi sometime back also came up with a report which suggested that Chinese players are going to be swelling up graphite electrodes capacities by as much as 40% in the year 2019 as well as 2020, which in turn would lead to correction or could lead to correction of prices by as much as 40% in these 2 years. So there are been these concerns, and also which is adding to this pressure point or intensifying the pressure for these players as a whole is the price cuts which has come through from Tokai Carbon, which is the 4th largest global electrode maker, which has been in turn negotiating contracts, negotiating a contract where the graphite electrode prices are down by as much as 10% for the period of around July to December, which in turn might have a bearing even on domestic graphite electrode players. Now remember, we do understand that there is a difference between the Chinese and the local graphite electrodes. Our graphite electrodes are relatively of better quality, but then these small steel players can do with lesser quality and can import, which also gives us, this in turn could weigh on the pricing scenario. Also, in some of more concerns coming in for the industry, FY19 annual report of Graphite India typically has not painted a rosy picture for the industry as a whole. It's mentioned a lot of concerns. It said that with needle coke and the new capacities coming in both for needle coke, which is the raw material, and electrode, supply exceeds demand. It sees the market dynamics reversing until there have been more steel capacities which come up in China. And also it suggested that potential prices can decline. At this given point of time, the prices are relatively higher. So this is a major cause of concern. And also they flagged an issue in terms of the rising cheap imports, which they see increasing going forward due to the withdrawal of anti-dumping duty. We're not typically looking at a really good picture coming out for graphite electrode manufacturers. Remember the fact that the margins have already normalized from a level of 70% to 50 to 55%. So we don't know how much more pain is in store for these players going forward.
Okay, Nikki, thanks so much for putting that into perspective. So maybe some more pain, unpredictable, but maybe some more pain for graphite electrode makers. But some gains for some companies. PVR, remember, has long maintained the top spot amongst Indian multiple exchanges. With a wide network of screens, it's been able to attract moviegoers even while maintaining its premium pricing. But INOX Leisure is catching up fast. Over the past few quarters, INOX has steadily improved and narrowed the gap with PVR on a number of business metrics. And it's reflected in the stock prices too. Mishika Parak is standing by with a comparison in those numbers. Mishika, what leads us to believe that INOX is catching up? On what parameters?
So there are several parameters that we looked at after the Q4 results came out for both PVR and INOX. The first one being average ticket price. So the average ticket price gap between PVR and INOX has come down to rupees 6 in Q4 of FY19, and this was rupees 16 in Q4 of FY18. So it has come down significantly. The reason behind this is PVR has not been aggressively increasing the average ticket price in order to attract more footfall, while INOX has been steadily increasing the average ticket price slowly over time. So this has led to the reduction in the gap. Also, the GST rate cut has transpired into the movie ticket prices in Q4 FY19. That also affected the average ticket price gap. And in INOX's relative pricing power and focus on premium formats aided this parameter. The second parameter we're looking at is spends per head, which basically means money spent by a moviegoer on an average. So in Q4 FY18, the gap was rupees 20, which hasn't come down significantly, but has still come down by 2 rupees to rupees 18 in Q4 FY19. This is purely because of INOX's efforts towards premiumization of the brand. They've been investing heavily in insignia to change the perception of the brand in the eyes of the advertisers, which has helped them in both the parameters, that's spends per head and average ticket price. The third parameter we're looking at is average revenue per user, which is ARPU, which is nothing but an addition of the average ticket price and spend per head. Average revenue per user has narrowed down drastically between INOX and PVR from 36 rupees in Q4 FY18 to 24 rupees in Q4 FY19. The ARPU for PVR has decreased by 5% over the past 8 quarters, while it has inched up by about 2% for INOX. Let's look at food and beverages segment. The revenue growth in this segment for PVR was 22% in Q4 of FY18 and 48% in Q4 of FY19, while for INOX it has risen from an 18% to a 58% in Q4 FY19. So INOX is equally aggressive in terms of promoting their F&B offerings as PVR. Also, F&B growth will come from increased footfall participation and a greater mix of premium offerings for INOX in the future. Then let's look at advertising revenues. Now, this is one parameter where INOX is lagging behind PVR by almost 50%. PVR gets higher advertisement revenues per screen due to scale and because it's located at premium properties, while both INOX and PVR have...
Yeah, INOX and PVR have had that changes as well. But that's fine, Mishika. So now let's talk about the stock. I mean, how do the valuations compare and what are the analysts' verdict?
So let's look at the analyst recommendations on both the stocks. 88% of analysts that cover INOX recommend a buy on INOX, while 69% recommend a buy on PVR. Also, Bloomberg data shows that the potential upside is 14% for INOX as compared to a 5% for PVR. Also, the CEO of INOX, Mr. Alok Tandon, had a word with Bloomberg Quint, and they told us that they plan to add another 80 screens in FY20. Also, they plan to leverage the renewed demand for exciting alternate content beyond cinema with associations like ICC Cricket World Cup and NBA. And their recent growth is attributed to innovation and being rigorous in areas like content, F&B, advertising sales, operations, promotions, and screen additions.
Okay. Mishika, thanks so much for putting that into perspective. Well, maybe it's reflected in the stock price movement as well. INOX has certainly done reasonably okay compared to PVR in the last few months. That's 328 and counting for that stock. That's all that we have on First Word today, but lots more lined up on Indian Open. We discuss markets and macros with Pramod Gubbi of Marcellus Investment Managers. Pricing power as it starts to return to cement makers. Nitin Gadkari alleges cartelization, and Srinivasan Johnson to talk about all of that. A very important conversation. And even amidst the auto slowdown, Volvo Eicher is focusing its energies on shifting to BS6. We bring you a conversation with Mr. Vinod Agarwal. But after this break, a full tilt towards the immediate day's trade.